Hi, everyone. Welcome to the TimingResearch.com crowd forecast news for May 13th, 2024. We are recording this at 1 p.m. Eastern Time, and this is episode number 429. Today, I have arranged for Michael Filighera to join us again. His sites are logicalsignals.com and tradershelpingtraders.com, and he's going to do a solo market update for us. So great to have him here. I'm going to go ahead and turn it over to him.
Thank you, David. Excuse me. I also have the raspy voice going. My name is Michael Filighera, and again, I am with logicalsignals.com and tradershelpingtraders.com. And I have been trading, I began trading in 1979, and I was an options market maker, and I've been an options market maker here on the Pacific Coast Exchange in San Francisco. And also I've traded on the London Traded Options Market, the EOE, the European Options Exchange, which was in Amsterdam in the Netherlands. And then that's where I also got my first exposure and introduction to an all-electronic exchange, which was the DTB, or the German Bourse, while I lived in Amsterdam. I came back to the US in '97, went back down to the Pacific. As everything became more electronic, and there was no need to have an open outcry pit on a floor when people could electronically just place their orders with the exchanges themselves, and they got routed to the best market at the time. So things got too slow, and I decided to get off the floor, and I went and set myself up, excuse me, in my home office, and I continued to trade options for a while. But in 2014, I decided that late 2013, 2014, that I was going to give my shot at being a day trader, and I was choosing the futures market. So I was trading at the time the S&P 500 and also the NASDAQ 100, and also others as they would become interesting to me. And so that's pretty much where I've hung out and stayed. And so I continue to trade for myself. But now I basically am in the NASDAQ. Excuse me. So I trade the NASDAQ each day, the NASDAQ future. But I'm going to start here with the S&P because that is the format that we use on this particular show, and we update accordingly from the S&P. And so I'm going to start on my 4-hour chart. And what I normally do, like the first question that normally we get asked or ask ourselves here on the show, is what do we feel will happen to the S&P between now and Friday? Are we going to close higher or lower? Now, I'm going to go over to the SPX, and so that we can take a look to see what today's opening was in the SPX. And this would have been, let me just make sure I got the right time. Yeah. And it says the market opened at 52.33. And so I'm going to say that we're going to use that as the opening. And so the question would be higher or lower by Friday. And that's a very challenging question right now, to be honest with you. And the reason is that we have so many things coming out this week that will ultimately have an effect on what these markets do. And it's going to be how the markets actually interpret them. So we have, well, let me just double check, and we're just going to take a look at the economic numbers. Tomorrow we have Producer Price Index. And then we have Jerome Powell will be out speaking tomorrow. On Wednesday, we have Consumer Price Index. And then we have U.S. retail sales, and we have the Empire State Manufacturing. So we have quite a renewal, I guess I would say renewal, that got a lot of the economic news did not come out last week, but is coming out this week. And so it's kind of almost playing a catch up. We have a number of Fed presidents or governors all out speaking each day this week. And that's not unusual as we start to approach, how they're going to be dealing with interest rates and how that all fits in. On Thursday, we have initial jobless claims, Philly Fed manufacturing, housing starts, building permits, industrial production and capacity utilization, and four Fed people. On Friday, which I would think would be almost the most important one this week, and that's the U.S. leading economic indicators. That's actually the data, besides PCE, that the Fed pays very close attention to. So again, starting tomorrow, we have a bunch of economic numbers that could have a strong play against what the market will do. Now, I'm going to go back to the chart and say, okay, so how do I want to really put this in to say higher or lower? It becomes a very, very difficult decision. But if I based it on my count and I based it on how things were trading today, then the S&P is getting pulled in two directions because of the overlap that the S&P has, of course, with the broader market, so the broader New York market, but with the NASDAQ. And so the NASDAQ today, and the fact that Apple Computer is in the Dow, in the S&P, in the NASDAQ, and I don't know if it's in the Russell, but I bet you it is. But in the first three, it is. And in the S&P and the NASDAQ, it is the heaviest weighted stock. And so what it does, so the market tends to do. So as we check in and we look, it's like the NASDAQ now is just barely hanging on to being up on the day. But I guarantee you they're going to renew it. And they will push it all the way back again. And why? Because they're not taking down Apple. So Apple got news today, and the news was that they got a good boost from somebody because of now that they're going to be associated with, through one of their chips or something, with artificial intelligence. And that was enough. And that has taken the stock up thus far today over $3. And so when you have a $3 move in Apple, that's going to be probably equivalent to several dollars in the NASDAQ. So in other words, it's more like $15 to $20 in the NASDAQ, plus just the anticipatory, just like, oh, that's bullish. And so everybody else starts to buy in or they cover. Now, forgive me for the cough. So what does that really tell us? It kind of just is what the market is doing today. If those inflation numbers, or if the PPI and the CPI come out remotely on a negative side, it's not going to make any difference what AI intends to do. I think the market will go down, and will go down hard. If any of the manufacturing surveys come out and show that there's a decline, or something more negative to the market, we'll get a very negative reaction via the futures and then the individual stocks. And right now, we're getting a broad mix. We're now seeing that they're beginning to hit the markets. They drive them down towards the session lows that we have. And it's, the other thing that I want to add, and it's really a conversation that becomes very, very complex, is that so much during our day, it isn't a matter of, did the market just turn bullish, or did the market just turn bearish on some type of news or anything like that? It's like, no, not necessarily. I've not seen anything today. But what I do pay attention to are options flows. Now, it's something that I discuss in my own analysis that I present every day. And it's not something that is just wildly anticipated or expected, because it gets very complex. But it is now plays a very big part. And basically the reason is because of zero DTE options. Zero DTE options stands for 0 days to expiration. So we have them. We have those expirations every day, Monday through Friday. And not only in the SPX, and not only in the ES, but we have it in the NDX, we have it in the NQ, we have it in the Qs, we have it in the spiders, we have it in many of the other ETFs. So what that does is that produces where you've got large enough players where they come in and they start either buying or selling the market at a particular time. And it really has an influence on what happens to the options. And any buying or selling can be aggravated by the adjustments that need to be made to their positions, to a lot of the options positions. Now, what does that all mean to us as traders or position traders? And if you're a position trader, nothing. You're just going to have to write out what it's doing. The main purpose that I'm talking now about them is that there's no news. There's no news to say, well, why did the Dow suddenly go from being up 90 to being down 90? Why is the NASDAQ, which was up 50 or 60, now barely trying to hold on, being unchanged? And that's basically the reason. So again, if I had to go on what my call would be, it would depend on my Elliott wave count. And I'm on a 4-hour chart again, and I'm going to just show you that what I have done is here underneath all of this, I have a minor fourth wave. And so if I pull this out one more, let me go over to, I keep trying to change this. All my charts got turned over to, I've been a Thinkorswim and a TD Ameritrade customer for many, many, many years. And then Schwab bought them, and my turn to get put over onto the Schwab side happened over this weekend. And so they promised that all my charts would come in as the same as I left them, and that's just not the case. So forgive me as I try to work through all of this, but I want to go back out and to show you. This is the October 2022 low. And that was a major low, but it marked the completion point for what I'm calling a primary A wave. And what I would need to do one more time is to kind of go out to our all-time high, which we've exceeded, but at the time, and we reached on January the 3rd, 2022, and in the cash market, that level was 4,818.62. So from that level, I marked it as the completion point for a cycle degree third wave. So this would, I need to add one, the intermediate primary cycle. So that puts us in the cycle fourth wave correction. And within that, what's going to be is an A wave, a B wave, and then a C wave back down, and that'll complete the correction. So within that, here's the A wave. I think we're finishing up the B wave. Now, what is that B wave going to look like? Well, it has an A, a B, and a C. So those we have in place, and now we've got that intermediate degree C wave. So now I'm going to bring this back down to the daily chart, which they see they don't ever save. And so now what we got going on, there's the bottom of the B wave, and then we have 5 waves of minor degree to complete that intermediate degree. So we're counting those out. We have 1, 2, 3. So there was the minor 4 that I spoke about, and now we're in that minor 5th wave going up. So I'm going to go back out to the 4-hour chart, and here we have that even broken down a little bit so we can see the internals. It's not been an easy run up. Now, granted, it does continue to appear and produce itself as big. This is a very bullish move. But I think when we look at the internals, at least on an Elliott basis, yes, it's bullish, but it is not clean. It is not does not bring about a feeling within me that, oh, we're just going to go to 5,500. We're going to go to 6,000 here in the S&P. It doesn't. It does feel more to me that we are finishing a move, and the market in that manner is jumping around on all kinds of different thoughts and narratives that are being presented through our market. We just are still working our way through the end of first quarter earnings. And so we saw a lot of earnings come out that some were misses, some were disappointments, but most of them, even within the Mag 7, were not bad earnings. They weren't destructive to the market. They may, like for example, in Meta, their earnings were actually quite good. What knocked them out of the pool, so to speak, was when management or CFO or CEO came out during those earnings reports in the press conference and said that the company intended on spending up to $40 billion for their metaverse products and on other upgrades for the company. And so the market did not like that. The market then sent Meta from 496 is where it was before the earnings were reported. And that day or the next day, it traded down to 400. Now, since it has recovered, and it's recovered quite nicely, now trading at 468. So it's come all the way back on the hopes that artificial intelligence and the fact that the Fed has to start cutting is all going to come through. Now, the market starts to get a little sketchy. I will be honest, it gets a little sketchy. But here we are within a minor fifth wave going up. Now, what's going to be inside that are going to be 5 waves. Come on. 5 waves of minute degree, and those are labeled in the white. And so we've done 1 and 2. We're in minute wave 3. And minute wave 3 is going to consist of 5 waves of minuet degree. So the understanding is that with Elliott wave, they're building blocks. And you start with the simple premise. It's like 5 wave structure. In this case, it's like I only have 3, and this could be a 4. And here are the Fibonacci levels for what could end up being a more conclusive 4th wave. So being that we started by going up, and we're now going to come back down, leaves this interior as it's an ABC coming down. And so my first level would be 51.8570, and that's basis the cash market. Now, between the cash and the futures market, 52.43, and the SPX is trading right now at 52.20. So there's still about $23 in premium future over cash. So if the cash were to come down to, let's say, 51.90 or even 5200, then it's basically just dropping back down to a level that really was resistance for quite some time. But I would expect we're going to get a little bit deeper. And so maybe that's, they're not going to or this could all happen very quickly after CPI or PPI, and then the market bounces again. And that's also very possible, that instead of the reaction to the news is not long-lived. In other words, it just comes in, it does it, and it's done, and then they get back to what they were doing previously. That's also very possible. Now, how do we then put this all together for Friday? And so if I were to say, do I think the market's going to be higher or lower on Friday? My first instinct would be to say lower, because I think I have more room to the downside than I do to the upside. And with the current environment, I think we will likely end up lower and in a corrective phase. Now, does that mean that next week, the week after, yeah, market could just resume and keep going up, and totally based on something else and other narrative and whatever the market happens to be feeling at that particular time. So that's the difficulty right now. And these swings, even in the S&P, are getting to be pretty large. So it makes doing analysis and even just putting on positions very, very difficult. But I would have to think that we are going to be lower on Friday, but that might just be for Friday's opening, to be very honest with you. Because again, what do we got going on this Friday? We have the May expiration, which is not going to be gigantic. The big one to keep an eye out for would be the June expiration. The June expiration now is building to be very, very large. But what we have seen in the S&P and across the board and all of the underlying, all of the component companies, what we have seen is an increase in call buying. Now, that normally you would associate with it that the market or the traders are, whether they're retail or whether they're professional, believes that the market is going to go up. Or at least the market in Apple and AMAT and AMD and Amazon, et cetera, all the things that I have listed, the market's going to go up. And so here we are. And the Elliott wave count actually supports that very cleanly. We've just finished 1, 2, and 3. So we're still looking for a completion point for the minute wave 3. And I'm suspecting that's going to be at 52.60 or as high as 53.12. And then we do another correction, and then we do another rally. So there's several levels that we're looking at here that the market can get to. And we're now in the month that notoriously suggests lower levels. Now, what do I also work with, excuse me, cycles. And there are a lot of cycles that are coming in that cycle like a trough. So we're looking for a cycle low. Not necessarily going to be pushing the market down to like 4,000 or anything like that, but the market will come in and produce lower levels as the cycles put that pressure on the downside pressure. Now that's coming up as well. And so we have a little bit of an upcycle, which should expire or just move through by Friday. Then we go into a very strong period where the market should actually decline. And that would be as these cycles move to their trough. And that comes at the end of May to the first week of June. Then we get a little bit of an upcycle, and it doesn't really go that long, but maybe for like 3 weeks, maybe a month. And then we go into the next turn, and we're looking for that low into September. So you see how now you can run Elliott and the cycles kind of together a little bit, right? So if I'm kind of coming up here and I'm saying I have minute wave 1, minute wave 2, I'm looking for a minute wave 3 high. I may get that minute wave 3 high by Friday of this week. Well, what happens after that? Well, then we go into a minute 4th wave correction. And here, folks, well, let me just open this up a little bit if I can. Here, this was minor 4, A, B, C. And look what happened there. All right, this is a 4-hour chart. You've got many days. But it started to come down on the 28th of March, and it finished out on the 19th of March. Now, interesting that the 19th, not 19th of March, 19th of April, and what that date represents is the April expiration, which was a push lower going into that expiration. So interestingly, we're coming up to the May expiration on Friday. Are we going to get another push? Will it come via the minuet wave 4? Which actually here's the markers. It can go, there's the first one, 51.86, we'll call it. The second one's 51.50. What it can't do is because it would break the pattern, is it can't go below 51.23, 51.24. Then this would not be a 4th wave. I'd have to revisit what this could be. And it could really turn into a whole bunch of alternative views on what the market does next. But if it were to break that level, then the market's in trouble. And it's likely going to go down and break 5,000. So if it breaks 51.30, not only that, is it breaking 5,200, which still should provide some support because it was such strong resistance. And it was what we call in the options world a call wall. So it was resistance. Just like this 5,000 area back here in April was a put wall. So it should have been support. So as I try to say, not that it's necessarily 100% true, but look at it this way. When this call wall got broken at 5,200, got poked up, they came back down. They tried to get it back below, it didn't. It went up, and look what happened after. Then we got a serious run up. And when did that occur? On Friday, during a daily expiration. So things kind of get surrounding expirations and how positions are going to get closed out. Well, now we're coming back down. So I would assume that there might, the 5,200 level, option wise, should still be pretty large. And I can go over, and these are just, I'm spending the time because it's just me today, and I hope you all don't mind. And actually, if you want to just put into the chat, if there's something that you would like me to go over and review. So, okay, we need to look at all these strikes. Jeez Louise. So what we're going to do is we're going to come way down and we're going to go right to the 5,200 strike. And I'm going to see what the open interest is. Well, I'm sorry. I opened all of them and I didn't need to. You can see there's a lot of options and they're all trading. Okay, there's the 5,200 and the open interest. I don't want that. Volume and open interest, please. 35,000. So it's still there. So this call wall is still there. And it would not surprise me to see the market and the players push it back to that level by Friday, to below that level by Friday. So what's that going to do? That pushes it right up into, we're going to go right up into this. And again, if it breaks, then we go into this. And what we're looking for now is an A, B, and now we're looking for a C wave down. It could bring us into there. Then we rally a little bit, and then we come back down one more time. So, hey, George, yes, I'd be glad to do that for you. So how then should we be answering our question? And I'm trying to answer it to say, well, I think it'll be lower, and then give you the reasons as to why I believe it'll be lower and what we fill in there. Some of that may be important. Some of it may be like, who cares? So let's leave it to say that I'm thinking that, well, we come in, market comes down, maybe rallies a little bit, then we come down again. And then to put in that cycle trough, that low, towards the end of May, beginning of June. I'm going to move away from the S&P right now. And what I just did get a request from George was, by the way, George, so nice to hear from you, even though it's just to ask me for that. Here's the GDX. I happen to know because George and I have been, we've discussed many things together, and one of his favorite markets is gold. And so we have the gold miners. And so I don't necessarily have a count that goes with the gold miners, but if I take it from this low, George, I would look at this and go, I have a 1, 2, and then 1, 2, 1, 2, 3, 4, 5, 3, 4. That's only 3 up. That's weird. Yeah. So it almost looks like that this high may have completed a 3. 1, 2, 1, 3, 2, 3, 4, 5. No, it did finish 5 up, but I don't know of what. And then we get A, and then this is near regular, but we got a B, and now we're coming back down. And there's a very strong possibility that it could just come all the way back down to that low. And so one way that you could check that out, since it was appearing to be an irregular, we would go this way down to here and then go up to there, number 1, so we could show 1.618. I don't think it's going to get that far, but I think it could get back down and equal that, because the other side of the coin is, let me take this one off and just put on just some different fibs, which would just be the normal. Getting used to it is sometimes a pain. Come back down to there. Come back down to there. Thank you. Oh my God. it's supposed to anchor. I've got that set, but it doesn't want to. All right, let me just try this again. Nope. Sorry, George. Sorry, everybody. No, 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 don't do that. Remove. And let me just bring this down. Activate. Come on now. Play nice. There. Okay. So, yeah, it didn't really do any that big of an irregular. So it's a little bit difficult to say that it's going to come all the way down some bit, but I think it has the potential to at least come back down to 31.89, maybe 20 cents below 31.60 right here. And before it rallies again. Now, gold somehow is finding its weaker self today, and that's not helping miners. But let me just kind of tell you about gold as well. So on this one, I think, George, I think it can come down. If I look at gold itself, see, it's still correcting, and this is getting a little bit weird because this could be just wave A of 4. I was actually thinking it could be the whole complete 4, like this is A, B, but then this gets really weird in here. So it may not only be A, B, C, A, and this is a B, and now we're going to come back down in the C wave, and can't really tell you, but gold has the possibility, because what I can put in is the, come on, the fibs for just what any type of correction off of this run that we just had. And 382 is 2276. So this could come back to 2276, even get itself down to 2223. And we should also have support here at 50. But gold can still do some correcting before it resumes that uptrend. Because you'll notice that off of, let me get rid of this. Off of this, it only did 3 up. And as soon as it were to break this level, which it already did, its left is 3 up. So that being the case, you're going to be looking for 5 down. And that at least to move back to 2285, if not below. And that would also, I think, pull down the miners. Now, on a little bit longer term basis, I'm thinking that when you get that type of a correction, it should present a nice opportunity to step in and either add to positions or just pick up a new position. Because I think it's going to be a correction here. And I still, my longer term, again, we're working same thing over in the equity markets. We got a 1-2 and got another 1-2. So we're still looking for the completion point for this internal minute third wave. And where is that going to come in? If this low does not get taken out, I'd be looking for 2,500 for it to complete, if not higher. You can see I have a lot of higher levels. So I think that the longer term outlook for gold is pretty positive. What gold doesn't like is the dollar keeps trying to move itself back higher to 106 to 108. Gold doesn't like that. Gold traders don't like that. So, you know, higher the dollar goes, the lower gold will go. So, but at the same time, gold is notorious for still be considered a storehouse of value. So in other words, you know, that when all else fails, gold will be used. And so I still think that we still have quite a bit of central bank buying in gold. And that's going to be not just the US, because I've not really heard that the US, but they're always very, very secretive about when they're adding or taking away from US gold reserves. We never read about that. But I know that the Central Bank of China, the Central Bank of Russia, the Central Bank of India, I believe also Pakistan, I think Japan, A lot of countries are getting themselves ready for digitalization of the currencies. I will look at NVIDIA for you, not a problem. You own the stock, and yes, there are earnings coming, and yes, it's extremely volatile. I will take a look at it. Boy, that's a good one to choose. Thank you for that suggestion. But just to finish up here on gold, central banks are buying gold, and the reason is because currencies are becoming digital. I mean, as much as people say, "Oh, I don't accept that," it's like, well, it's already happening, and it's already here. I mean, when we think about that we can get on our phones or we can get on our computers, and I can transfer money any place in the world without having to walk in a bank, without having, my money is deposited in my account digitally. I'm not getting a check and I'm not putting a check in the bank. It's all being just transferred digitally. So it's already basically here. We still have paper currency, but I think eventually that will go by the wayside, that it'll all be digital. And if you live in Europe, you're kind of already used to that. Yes, there's still currencies, there's still euros and physical euros that you could put in your pocket. But banking and bill paying, I lived in the Netherlands in the late 80s to the mid 90s. And I didn't even send any checks. There were no checks. I would never get a check from a bank. Everything was it was electronically added. And I gave them slips that said, oh, go pay this vendor or pay that vendor. But as far as like sending, outside of that, no. So digitalization of currency is going to become is real. Now, what China is doing is that they would prefer that the yuan is the international currency of trade. Right now, it remains the dollar. So that keeps the dollar in a very big light. Everybody still needs to transfer or buy or sell dollars in order to do commerce. So, but if China is really looking to take that whole position, to take that top position, well, then they've got to be backing that currency with something. A digital currency without, well, what can I do? What do I get if I walk to the central bank and say, well, here, you can have my digital one. What do I get? They are supposedly, this is what I'm reading and hearing, they're backing it with gold. So that's keeping an upward bias to gold, as well as a lot of the geopolitical problems that we're seeing in the world. If any of them just really ignites, which there are two that come to my mind that are still very, very volatile. And if anything else hits us on an international stage, it could be very positive for gold. So I do think, actually, honestly, I do think that gold will at least see 25 to 2,600. And I believe that'll happen before year end. Let's go over and take a look at NVIDIA. And right now, NVIDIA is a tough cookie to look at. Here we have, this is October of 2022. So this is where I would have marked a primary A wave completion and what we're now doing. But this is the interesting part. A, B, 1, 2, 3, 4. It absolutely kind of reminds me. I could say this is A, this is B. Yeah, see, it just really comes off in a very strange pattern, almost as 1, 2, 3, 4, 5. And 5 down would suggest that what came prior, well, isn't this interesting? Time frame. Let's go daily. I want max available, and I'm going to do this on a monthly chart. Let's see what I can pull up now. Yeah, this thing's done splits and everything else. So I'm really looking for that low right there. As it came down in 5. And that's what's really got me, because I'm going to have to say it's coming down in an ABC. And either I'm going to mark it a 4, and this is the 5. So let's go back down and take a look at that weekly chart. And there's that low. If we put a wave 4 underneath it, and we're doing a 5-wave structure up, here we have 1, 2, 3, 4. And now we're looking for that 5th. Oh, see, we're getting very close. 1, 2, 3, 4. And we're inside the 5th. So it actually is doing pretty much what the NASDAQ as an index is doing. So now I'm going to bring it down and take a look at that daily. And then we have that. And it tried, but it didn't. And look what it did. It did 3. That's always corrective and not impulsive. And we'd be looking for an impulse wave to take out that high. Came close. Boy, did it come close. 67, and this high was 74. Came within $7. And for NVIDIA, that's nothing. All right, so if that was the completion point for 3, and this was A. Wow, very difficult. A, B, C, and this was the 4. So that's 3, this is 4, and then we're putting in a 5, maybe. All right, so let me get rid of that so I can look at this. So if this is 3, A, B, C, 4, 1, 2, 1, 2, 3. Yeah, see, this is so choppy, very, very choppy. This is what gets very confusing, because there are rules that we apply to the chart for the particular pattern that's in progress. So that high may remain in place, and the market may choose to not like the earnings. They may like the earnings, but there's something could be said. Now, this company recently, we're going to say off of that low in 2023, which, when we compare that to the, even because NVIDIA is big in the NASDAQ. So I go over and I take a look at the NASDAQ, and I go back to October of 2023, and there it is right there. And that was a low of a B wave. So if I'm going to consider that NVIDIA is going to be in the similar type pattern, then I have to think that low is a B wave. And this is a C wave up. Or, like I said, it's a 4, and this is the 5th wave up. And that it's a intermediate degree 5th wave up. So we're looking at 1, 2, 1, 2, 3, 4, 4, 5. That's wave 3. A, B, C, wave 4, and this, wow. Okay, so here's the other side of the coin. If I'm going to put a 4 here, and I'm expecting an intermediate degree 5th wave up, here's the other side. Because I could say, oh, okay, well, this looks like it could just be finishing. This is wave A of a correction. This is wave B of the correction. And we're going to do a C wave down, which would mean disappointment on the 22nd. They don't report till May the 22nd. But what it also could be is this is a 4, and it's 1, 2, 1, 2, 1, 2. That suggests blast off. Now, how do we want to actually measure that out? Well, if this is going to be a 4, and this is the 3, and this is the 4, then I've got to go back to what I'm going to be looking at as intermediate wave 1. That's the big one. 1, 2. So let's try this. It's not really, I don't think it's going to come in real clean. And the reason is because it's pretty small. we're looking at for wave 4 to wave 5, you can see we're not really even getting across the where we need to be. So this one may not. And so what a lot of times, what we do on a Fibonacci basis is that we compare the 5th wave to the 1st wave. And so that would be the 1st wave, and that's the 2nd wave. Now, what I can do is I get rid of all these because they've all been exceeded. And 2168, nope. I can go to these two, which would be fitting for NVIDIA. And you can see where those come in, 1,049 and 1,094. And so if I'm going to go back down and I'm going to take a look at that daily chart again, and it's 1, 2, 1, 2, 1, 2. Yeah, it has to be. If that's how it's going to be counted. And that's on the daily. I can bring it down to the 4-hour. And we're going to open up that same window, right? 1, 2, 1. That's a weird one. 1, 2, 3, 4, 5. 1, 2. Wow. It's very difficult. That's kind of what the market is actually telling us as well. So you got two sides to this, and they're really legitimate. Both are legitimate. That the earnings are somehow disappointment or something they say the market doesn't like, and they just floor this thing lower. Now, I want to show you one other thing that I do when I'm trying to figure out what could be going on. The next major expiration for NVIDIA, of course, is Friday with the monthly. And so I can just go like this. Let me just improve this and say 75. And so I'm going to come down here. Now, the at the money is going to be 900. So what we look at is, and what I want to look at is not volume open interest. I want to look at here. I want to look at straddles. And the straddle is that you're buying and selling, or buying or selling both. And I'm sorry for these flashes. I got to try to get those removed. So we look at the money, which is 900, and you can see somebody already has it on. And so if I'm looking to buy it right now, they're willing to sell this for $35. So, and that's like you're buying the call and the put. So I want to buy it. I want to buy the straddle. Right? So I'm buying the call, I'm buying the put, I'm paying $35. So basically what they're saying is they're not expecting more than a $35 move by this Friday. So that doesn't really even consider what the earnings are going to be coming in. So what I also try to do is I take a look at where these strangles. Now the strangles, if you're looking there, what I want to look at is a little bit different. But I look for the delta, and I look for the 25 delta, and that's going to be also the 920 call versus and then you're buying the 920 call, and you're buying that or selling, and you're buying the 915 put. And that's the same price, $35. So what they're kind of telling us, and what the next one that you would go out and look at would be the 24th. Now, this one might show a different picture because we showed for Saturday, but this is 2 days after earnings. So let's go take a look at that one to help you see, well, what is the market perceiving, right? So we got the straddle, and now we're going to the same one is right now it's the 900 is the at the money, and you can see, look at that. There's your difference. So for the for the earnings, the market right now is factoring in at least $100 move. But that's up or down. That includes both. But that's the type of move they're expecting. So they're expecting the volatility to kick in and to move this market. Now, one way that I would play the earnings, and it becomes very expensive, I will go back out to that strangle, And I'm now going to be looking for the 25 delta strangle. And that's right here. And that is the 880 call and the 875 put, which is real tight. And I like that. But look at $93. So in essence, when you go and you were to buy a position like this, you need to have that big of a move because you're paying $93. So you're looking for the stock to move either to the upside or downside by at least $93. That's a huge move. But guess what? NVIDIA has been actually doing that. That's how this is the reaction we get. If they've been blowing the doors off their earnings, you get a 100-point move in the stock. So how does that then, when we're looking here, they're just kind of right in between. But now let's look at that. What happens if it is just like a bunch of threes going up? Well, it gets up between now and the 22nd. I can't tell you, but let's just say it ends up here. If we're looking for 100 points up, well, that's 1,000. You're looking for 100 points down, that's below 800. Just about 800. So that's how that's what I would be looking at and expecting. Now, it becomes really difficult to answer your question when you're basically saying, well, what about, for or not? No, how am I going to answer that? I am answering it. It's unclear. The market doesn't know. And the market is making anybody who wants to come in and play it like that, it's going to cost you $100. You want to put on a position, it's going to cost you $100 because that would be the expected move that they're expecting from those earnings. So do I expect it to go up? You're going to give it a 50-50 chance. Right now, even the market is like, they're not sure. They're only playing to Friday. They're not playing out to earnings. There's no way that Elliott or I can try to interpret by the market move what it's going to do after earnings. I'm telling you right now, 1 2 1 2 1 2 suggests blast off, or ABC A 2 or B, and this is a C wave, and we get another drop down. Those are the two choices on this basis. Sorry to say. And boy, I didn't think I was going to be able to fill an hour, but I guess I did. Because I know that David has some other things that he wants to do. So again, my name's Michael Filighera. I am with logicalsignals.com. Yes. Paul, I'm sorry that you feel it's complete nonsense. I'm not sure what you were looking for. But if you find somebody that's going to tell you with some certainty, that's nonsense. Because you're looking for someone to pin your whatever on, and analysts don't do that. That's kind of also nonsense. But yes. So those are basically what I think here, and we'll see. But again, just to tell you that I'm with logicalsignals.com and helpingtraders.com. My email address is michael@mjf1partners.com. And feel free to email me. What I also do have is I have a trade room, and we trade the NASDAQ at the moment. But I do that together with Sasha Goring, who happens to be in Germany. And so we provide our intraday analysis and our picture for that day. And we trade for basically from 6 a.m. to 8 a.m. Pacific Daylight Time. So the first half hour is just a lot of the analysis and what expectations for the day might be and what we look for, where breakouts and breakdowns could happen. So because we're day traders. If you have an interest in that, you can go to logicalsignals.com or tradershelpingtraders.com. and then you will find a drop down for the trade room. If not, if you have any questions, because I also provide coaching, please feel free to contact me at Michael at mgf1partners.com. I don't recommend any direction, Paul. That would be suicide. You know, I gave you both sides, and I gave you a 50-50% chance. You choose. Okay, David, thank you.
All right, thanks, Michael. Great analysis today. Thank you for being here to do this solo market outlook episode for us.
You're welcome.
So just want to give a quick reminder for everyone. Be sure to subscribe to Timing Research on YouTube and your favorite podcast app. You can also go to TimingResearch.com and get access to the recording of this show as soon as I can get it posted, as well as any of the past shows or events. And Michael, just want to thank you again. So Michael Filighera of logicalsignals.com and tradershelpingtraders.com. Thanks, everyone.
You're welcome.